Hi, Joe Conroy here, financial advisor, and I'd like to share a quick story with you. I think it's one that's very important to any investor to listen to, and that's really the story about what to do when we're facing an all-time high in the market. So we're not quite where we were, but we're getting close to our all-time highs, and a lot of people, or a lot of investors, I'm starting to hear a little bit more about, should I stay invested? Is the market topping out? Should I get more conservative? What do I do when we're hitting these all-time highs? So I'd like to go back in time a little bit. When we hit on the Dow Jones 30, the Dow Jones Industrial 30 Index, we hit an all-time high early last year of 25,000. So that was a level that we'd never reached before, and at that time frame people were saying, well, maybe I should lighten up on my allocation, less in stocks. What do we do? Let's go back a little bit further. There was a all-time high in the market that no one had ever thought that we would be able to reach, and that level was 2,500, right? So now we're around or a little bit over 25,000, but at one point, 2,500 on the Dow was the highest number that we had seen. It was an all-time high. People thought, how could we possibly go higher from here? That time frame was 1987. So in 1987, an all-time high of 2,500. If for whatever reason you slipped into a coma and you woke up 30 years later and you were invested in that Dow index, you would have 10 times more money. And let's think about what happened over that 30-year time frame. You had terrorist events, you had all kinds of financial turmoil. 1987 did have its challenges. You had a tech bubble, you had financial meltdown, you had housing bubble, a couple of different Middle East wars and other things. There's a lot of different things geopolitically, economically, that would keep you from investing in these all-time highs throughout those 30 years. But at the end of the day, if you're able to stay invested, your maybe $250,000 investment in 87 could have potentially grown to a $2.5 million investment, or 10 times more if you just stuck with it. So the moral of this story is that it's important to not be intimidated by an all-time high, maintain your focus on the long term. Even if you don't have a 30-year time horizon, we still need to look for a long-term investment approach. And if history is any indication, not that it is, but there should be some good times despite market highs in our future. So thank you for watching.